Cramer's new PARC Index, Crypto Stocks and Market Trends. The world of finance just got a new buzzword, and it's sparking both excitement and debate. Jim Cramer, the energetic host of CNBC's Mad Money, didn't just showcase a handful of stocks on this week's episode. He introduced an entirely new index, PARC, designed to shine a spotlight on tech firms and companies with strong ties to the cryptocurrency revolution. But here's where it gets controversial. Cramer's unique groupings of stocks have had a history of moving markets. Could PARC be the next FAANG? Let's break down what's happening and why it matters. PARC stands for Palantir, AppLovin, Robinhood, and Coinbase, a cross-section of companies that reflect, to varying degrees, the explosive intersection of technology and crypto. Palantir, while not a cryptocurrency company in the traditional sense, has made waves by integrating blockchain technology into its data analytics platforms. AppLovin, Robinhood, and Coinbase, meanwhile, each play pivotal roles in the crypto ecosystem, AppLovin in digital advertising and app monetization, Robinhood as a major retail trading platform for crypto assets, and Coinbase as a leading cryptocurrency exchange. The immediate reaction to the PARC announcement. A sharp rally in Robinhood and Coinbase shares, signaling real enthusiasm from the everyday investor crowd. Cramer's influence is no secret in financial circles, but the launch of the PARC Index, positioned as a barometer for the crypto-linked public equity market, raises an important question. Are media personalities now shaping not just opinions, but actual investment flows? This isn't Cramer's first rodeo. His previous FANG grouping, Facebook, Apple, Amazon, Netflix, and Google, became shorthand for tech giants, effectively moving the needle for how investors tracked and talked about equities. If history is any guide, PARC could have a similar impact, both in shaping investor sentiment and potentially sparking short-term volatility, or, just as likely, new, lasting trends in trading volume and sector interest. The rationale for PARC goes beyond just catchy branding. The index, or as Cramer dubs it, the Crypto Asset Performance Index, is intended to track companies that are deeply entrenched in the cryptocurrency ecosystem, whether they are mining, trading, or building blockchain technology, or offering financial services tied to digital assets. Traditional stock indices often overlook these firms, even as they climb in importance. PARC, by contrast, targets the evolving contours of finance, where digital currencies and traditional assets are becoming increasingly entangled. But let's not sugarcoat the risks. The crypto sector, for all its promise, remains notoriously volatile. Institutional investors are finally joining the party, and the pace of blockchain innovation is staggering, but regulatory scrutiny and wild price swings continue to unsettle even the boldest investors. In this context, PARC could serve as a much-needed North Star for investors navigating this new terrain. By aggregating the performance of a diverse set of companies rather than focusing narrowly on a single coin or token, the index offers a broader, perhaps more stable, window into the health and potential of the sector. The debut of PARC arrives at a crucial moment. As more mainstream companies embrace blockchain and financial institutions launch crypto-related products, the demand for reliable, comprehensive benchmarks is stronger than ever. Cramer's index seeks to fill that void, offering portfolio managers, analysts, and individual investors a transparent tool to measure performance and compare it against broader market trends. But here's the part most people miss. PARC isn't just about numbers on a screen. It's a vivid illustration of how quickly the financial landscape is transforming. In the digital age, boundaries between industries blur, and new opportunities emerge, sometimes faster than the tools to track them do. The launch of PARC reflects a recognition that we need new ways to analyze the rise of digital assets and the companies that stand to gain from their ascent. So, what do you think? Is PARC a meaningful step forward for crypto and tech investing, or just another example of hype overshadowing substance? Does Cramer's influence give him too much sway over markets, Or does he simply recognize trends before the crowd catches on? Join the conversation in the comments. Where do you stand? Jim Cramer, Palantir's $200 target, and meme stock reality PLTR deep dive. Palantir, meme hype or market juggernaut? Let's talk about a tech stock dividing Wall Street, one that's winning headlines, fueling investment chatter, and leaving both skeptics and believers on edge. That stock is Palantir Technologies Incorporated, Nasdaq, PLTR. Now, here's where things get interesting. Is Palantir truly an innovation powerhouse? Or has it simply become the latest poster child for meme stock mania? On a recent episode of his show, famed market commentator Jim Cramer was asked by a caller whether it's too late to buy into Palantir. His response was both bold and slightly tongue-in-cheek. Palantir. When it traded for $50, I said it would hit $100. When it reached $100, I predicted $200. So, the momentum is still going strong, and no, it's not too late to get in. But does Palantir really deserve this explosive growth? These executives make some grandiose claims. At its core, it's a meme stock. Remember Robinhood? It's the same story. Meme stock investors aren't letting Palantir slip. That's not exactly a sound investment strategy, buying just because social media says so, but I'm telling you, the trend is hard to ignore. Let's cut through the noise. Palantir builds robust software platforms tailored to analyze huge datasets, help organizations make better data-driven decisions, and power advanced AI workflows. Its clients run the gamut from government agencies fighting terrorism to massive corporations optimizing their operations or deploying sophisticated AI models. Picture a coder hunched over glowing monitors, orchestrating solutions that can shape national security or streamline global business. Those are the kinds of problems Palantir tackles. But here's where it gets controversial. Should investors trust viral hype? Or does Palantir earn its soaring price tags on fundamentals alone? According to some analysts, Palantir's future may be bright, but the risk is just as high. While the company's potential is undeniable, many believe that other AI stocks offer not only stronger upside, but also faster returns for shareholders willing to think beyond market fads. For those hunting the next breakout AI player, perhaps one with the potential for staggering 10,000% growth, our latest report explores an undervalued company that might fit that bill. Curious to dig deeper? Check out suggested reads like 30 stocks that should double in 3 years, or 11 hidden AI stocks to buy right now for more investment inspiration. And this is the part most people miss. Is Palantir's rally a sign of investor savvy, or just the product of internet hype and crowd psychology? Do you think the current price is justified, or is it riding an unsustainable wave of meme stock enthusiasm? Let's spark a real debate. Share your take in the comments. Does Palantir deserve all this attention, or is it the next cautionary tale? Disclosure: no positions or financial interests disclosed. This article originally appeared at Insider Monkey.